If you're a law firm owner who feels even slightly unsure about your trust account, or if you've ever wondered, wait, am I actually doing this right? Or worse, if you're avoiding looking at your IOLTA account because it makes you anxious, you're in the right place. We've worked with firms doing 700,000, 1 million, even multi-million dollars each year who thought their trust accounting was fine until it wasn't. And here's the reality. Improper IOLTA accounting isn't just messy bookkeeping. It can trigger bar complaints, audits, and yes, even suspension. Today, I'm going to break down what IOLTA accounting actually is, what three-way reconciliation really means, the biggest mistakes law firm owners make, and the questions you should be asking right now to protect your license, because this is not something you want to figure out later. I'm Chelsea with Core Solutions Group, and for over a decade, we focus on clean financials, trust compliance, and financial strategy so your firm operates with clarity and control. And I've personally seen how avoidable trust mistakes create unnecessary fear, stress, and real professional risk. Let's talk about it. Most attorneys think IOLTA accounting just means don't spend client money, but that's surface level. IOLTA accounting means you are holding client funds in trust. Those funds are not income, they are liabilities, and you must track them separately by client at all times. And maybe you're thinking to yourself, can't my CPA just handle this at year end? No. IOLTA compliance happens monthly, not annually. This is important. If your books aren't being reconciled correctly every single month, you are accumulating risk. Now let's talk about the part that scares most firms, three-way reconciliations. Here's what that actually means. You must reconcile three numbers every month without fail and like clockwork. Your trust bank statement, your trust account balance in your accounting software, and the total of all individual client trust ledgers. All three must match exactly, not close, not off by a little, exact. And here's where most firms go wrong. They reconcile the bank account, but they never verify the client ledgers, or they rely on software without reviewing detail, or worse, they don't even know if their bookkeeper understands trust compliance. Ask yourself, do I review my trust reconciliation every month? Do I know how to read a client trust ledger? And would I feel confident if the bar audited me tomorrow? If the answer is hesitation, that's your signal. Let's be very clear. Most bar investigations around small firms are not fraud. They're sloppiness, unreconciled balances, negative client ledgers, earned fees not transferred properly, commingling. Stay with me here. Even if you didn't intend harm, the bar does not excuse mismanagement. I've seen firms overdraw client subaccounts accidentally, leave earned revenue sitting in their trust for months, or transfer funds without proper documentation. And the attorney had no idea it was happening because they weren't asking the right questions. Here are better questions to ask. How is my three-way reconciliation documented? Who reviews it? What happens if something doesn't match? And how quickly are discrepancies corrected? If you don't have clear answers, that's a systems issue, not a character flaw. The solution is not panic, it's structure. You need law firm specific bookkeeping services, monthly three-way reconciliations, clear documentation, internal review process, and separation between operating and trust clarity. This is why generic bookkeeping fails law firms. Trust accounting is specialized, and when done correctly, it removes anxiety, it protects your license, and it builds confidence in your financial foundation. If you're unsure about whether your trust accounting is compliant, book a financial clarity consultation with our team. We'll review your structure, your reconciliation process, and help you identify risk areas before they become bar issues. Link is below. Next, watch our video on trust account red flags every law firm should know. It connects directly to what we covered today, and it will help you spot problems early because clarity protects more than profit. It protects your career.